Hello, my name is Oliver Velez, and we are going to revisit coffee for the moment. Coffee was identified by me a number of weeks ago as a commodity that was starting to experience a lot of very strong signs of bioaccumulation. If you look to the left of this coffee chart, and more specifically, if you look at the bottom of the bars during coffee's decline to the downside, you won't see many bottoming tails or wicks at the very bottom of bars. You see a few, and they're relatively small. But if you look to the right of the chart, particularly during the month of March, you'll easily see that over a period of time, bottoming tails began to show up or materialize a lot more frequently. And this obviously is a key sign that drops to the downside are now starting to bring in a rush of bottom pickers. These early bottom pickers tend to be institutional in nature and strong enough to basically form these frequent bottoming tails. Now, when you start to see a proliferation of these bottoming tails, the buy interest obviously has picked up and moved to somewhat of a frantic pace. Now, as a result of these bottoming tails materializing and very close to each other, we have seen the supply in this area dry up, causing coffee to rise. Now, this rise is significant because it has neutralized the most recent bearish bar. Now, all red bars are bearish to a certain extent, but the really long red bars, what I call the bear elephant bars, need to be neutralized. And they're neutralized by the item, the underlying financial instrument, ultimately breaking above the high of these significant red bars. Now, the next significant bear elephant bar we have to deal with is here, the one that was formed in the latter part of January. All right, this move up has also eaten through a good portion of that bar. Now, I consider a bear elephant bar somewhat neutralized when approximately 2/3 of that bear elephant bar has been neutralized. We see that that is somewhat of the case here with this most recent move to the upside. More than 2/3 of this bear elephant bar has been neutralized. For the most part, that is pretty much a full neutralization of the bar. This move has completely taken out the most recent bear elephant bar, suggesting that this move is real. It's strong enough to get through former areas of deep resistance. Now, notice also that this drop to the downside from late December into the early part of the year, January, formed a low that, at least from a temporary perspective, forms an area of support. Well, that area of support on the subsequent decline gave way, and what was the floor becomes the ceiling. Right? That's a very prevalent concept in the market. A bounce off the 139 area, we break through the 139 area, and floor number 139 becomes the ceiling for those under 139. So this was the floor when coffee was above 139. Once coffee drops below 139, 139 becomes the ceiling, and we ricochet off the ceiling. We rally back to that ceiling, we ricochet off. We rally back to that ceiling here, and as you can see, the green bar started to come back off the highs, and then we break through the ceiling. So once again, this move is bullish for a variety of reasons. The move is occurring after a series of bottoming tail formations. This move has neutralized the most recent bear elephant bar. This move has eaten through the 1/3 of the another subsequent bull elephant bar. And what I'm looking for now is if this decline, if coffee continues to move back to the downside, if the 20-period moving average captures or contains or halts the decline, all right, that would be a very, very powerful indication that coffee is headed for much higher prices. All right, our initial entry into the commodity happened on this neutralization, this initial neutralization of the red bar, the bear elephant red bar. All right, so the commodity is somewhat profitable now, but we're expecting much higher prices, and we'll be keeping a very close eye on how coffee handles its next pullback. Stay tuned.